Curious about the financial future? Let's discuss inflation and market shifts.
Absolutely. With insights from Danielle DiMartino Booth, Stephan, and Peter Schiff, you have a powerful lineup.
And guess what? We've made it easy for you. AI has distilled their key insights into concise summaries.
So, buckle up. First up, Danielle DiMartino Booth dives into the impact of inflation on your investments.
Stay tuned. Stephan, and others will reveal valuable strategies for navigating these turbulent waters. Today, we are exploring economic insights from Danielle DiMartino Booth as she discusses inflation challenges and market volatility.
Danielle emphasizes that inflation continues to present significant challenges to both the economy and financial markets.
Danielle DiMartino Booth points out that inflation trends are creating considerable uncertainty for investors.
Charles Payne adds that market reactions are intricately tied to the Federal Reserve's decisions on interest rates. Danielle highlights that the Federal Reserve's policies will significantly influence future market trends.
She suggests that continuous rate hikes could restrict economic growth. According to Danielle, it's clear that investors are cautious regarding inflation's impact on their returns.
Charles notes that this sense of caution is reflected in current trading strategies. Danielle suggests that certain sectors may outperform during inflationary periods.
Charles adds that inflation expectations will continue to influence sector dynamics. What does Danielle predict regarding the inflation situation in the coming months?
Danielle predicts that inflation could remain elevated, continuing to affect markets.
Charles agrees, noting that volatility is likely to persist during the economic recovery. Danielle suggests that investors should consider diversifying their portfolios to mitigate risks in this uncertain environment.
She also emphasizes that closely monitoring Federal Reserve indications is crucial for making informed investment decisions.
Moving forward, it's important for investors to remain vigilant and adaptable as market conditions evolve. Today, we will explore Stephan's analysis of the Federal Reserve's recent decision to freeze interest rates.
Graham highlights how this decision is influencing stock and gold prices, creating ripples in the housing market as well.
Graham points out that stocks are surging as investors feel optimistic following the Federal Reserve's decision to freeze rates.
According to Graham, this has also led to a boost in gold prices, as many are looking to secure their assets.
Graham explains that the Federal Reserve's decision has created a favorable environment for stocks.
He notes that gold is becoming a preferred choice for investors during times of economic uncertainty. Graham also addresses how the housing market is benefiting from the Federal Reserve's choice to keep rates frozen.
He believes this fosters homebuyer confidence and could lead to increased sales. What does Graham predict for the markets following this decision?
Graham predicts that stocks will likely keep rising, buoyed by investor confidence.
He cautions, however, that gold may continue to serve as a crucial hedge against volatility.
In conclusion, Graham suggests that investors should consider including gold in their portfolios.
Moreover, he advises reviewing real estate opportunities in light of stabilized interest rates.
It's evident that the Federal Reserve's decisions can significantly shape investment landscapes and strategies. Today, we are reviewing Emily Brown's insights on the significant risks facing equity markets.
Emily highlights trends indicating that corrections could be imminent.
Emily Brown argues that current indices are relatively overvalued and a correction may be expected.
David Lynn supports this view, linking it to rising Treasury yields.
What does Emily Brown say about rising Treasury yields?
She notes that increasing Treasury yields correlate with higher borrowing costs, negatively impacting equities.
How are investors reacting to market forecasts?
Emily suggests many are shifting toward cash as a protective measure amid expectations of volatility.
What predictions does Emily Brown make for equity markets?
Emily forecasts a correction of 15 to 25%, highlighting persistent volatility.
Emily recommends that investors remain alert to Treasury yields and their impact on equity performance.
She suggests focusing on price movements and technical indicators over mere economic data.
Today, we are diving into Peter Schiff's analysis of the ongoing financial crisis with David Lynn.
Schiff draws significant parallels with past financial collapses, urging caution for investors.
Peter Schiff argues that today's financial turmoil may surpass the 2008 crisis.
He discusses the systemic weaknesses that could generate widespread fallout for investors. Schiff warns that inflation poses a persistent threat to market trust.
As inflation rises, investors face challenges in managing their portfolios. What should investors consider during this economic crisis?
Schiff strongly urges investing in gold and silver due to their historical resilience during currency failures. According to Schiff, equity markets will likely experience sustained volatility, with significant corrections expected.
He cautions investors to prepare for difficult market conditions ahead. What market corrections does Peter Schiff anticipate?
Schiff predicts that we will soon see a considerable market correction, with volatility expected to persist throughout the year.
In conclusion, Peter Schiff stresses the importance of having proactive investment strategies centered around precious metals.
He advises investors to remain informed and flexible as market conditions evolve.
Welcome to our discussion on the gold and silver markets with David Lin.
David provides insights into the factors affecting these markets and emphasizes the importance for investors to stay informed.
David mentions that both markets are currently experiencing high volatility.
He observes that investors are becoming more cautious in their approaches. David points out the connection between economic instability and gold price fluctuations.
He notes the immediate market responses that occur as new economic data is released. What insights does David provide about the silver market?
He explains that silver has its own dynamics due to its industrial uses. David suggests that diversification should be a part of every investor's strategy.
He reinforces the importance of being informed about market trends. What are David's predictions for the future of these metals?
David foresees that gold may experience further fluctuations as the economic landscape shifts.
He also highlights that silver's industrial demand could drive growth. In conclusion, David advises closely monitoring global economic indicators.
He stresses the need to balance risks and opportunities within investment portfolios.
Welcome to our discussion on the recent volatility in the gold market, featuring insights from David Lin and our guest analyst, John Doe.
David Lin highlights the context of gold's movements in the current market landscape.
What insights does John Doe bring to understanding these swings in gold prices?
John emphasizes two perspectives. Is this a liquidity flush caused by panic, or are we witnessing a fundamental market repricing? John explains that a liquidity flush can occur due to sudden capital outflows driven by investor fear.
So does this volatility reflect deeper market psychology?
Exactly. Persistent liquidity issues indicate that investors are reassessing gold's stability as a safe haven.
What future predictions does John Doe make regarding gold's price direction?
John foresees continued volatility, but suggests stabilization may occur near historic high levels if supported by economic conditions.
In conclusion, John Doe emphasizes the importance of being aware of central bank actions in navigating gold market volatility.
He advises that diversifying into various asset classes could provide a buffer against unpredictable market conditions.
Wow, that was a whirlwind of insights from our experts today.
Definitely. From Peter Schiff's stark warnings about the current financial crisis to John Doe's analysis of gold market volatility.
And I found it particularly interesting how they all highlighted the importance of gold and silver in these turbulent times.
Right? But it's not just gold. We heard diverse views on equity markets as well. Emily Brown raised concerns about rising treasury yields.
Absolutely. Yet others like Stephan gave us some positive spins on how to navigate these changes.
Exactly. And the disagreement on how severe the crisis really could be was quite revealing.
Before we wrap up, if you found these insights valuable, remember to like this video and subscribe.
Your support helps us keep bringing in these brilliant minds to help you navigate these challenging times.
Stay tuned for more engaging content, especially our upcoming deep dive into emerging market trends.
You won't want to miss it. Thanks for watching.